Joining us right now to talk more about the markets is Simeon Hyman. He's the head of investment strategy at ProShares. Also, Kevin Simpson, who is portfolio manager of Capital Wealth Planning, which has more than $1.5 billion in assets under management. Simeon, what do you think just about market valuations right now? Not necessarily what this deal says about them, but watching market valuations and looking at big players kind of struggling to find things they can buy.
Yeah, I mean, right now, look, at the market's trading at almost 20 times 2019 earnings, which isn't bad given how low interest rates are, but it's a full valuation. I think Mike hit the nail on the head with regards to private equity. High yield spreads are tight right now. You know, 375 on the high yield index, rates are still low, so it's tough to compete against that. Also, with regards to this notion of taking out whole companies, governance isn't as bad as it was 20 years ago. You know, companies are buying back shares, and if they think the times are going good going forward, they're actually increasing dividends. There are more tech companies that are consistently raising their dividends than ever before. So you can't kind of swoop in and just fix things because they're not as broken as they used to be from a governance standpoint.
That's a good point. Kevin, how about you? What do you think?
No, I agree. I think that valuations, we have them at a little bit over 19 forward earnings for next year. And to your point, there's so much cash on the sidelines. Sometimes smaller deals are going to attract the bigger investors.
What does that say about where the market's been headed, though? Momentum certainly has been in the bulls' favor. Almost every morning when we come in, we're looking at green arrows for the future, even when we've set new highs the night before. Now, this is a little different. Dow futures are down, but only by 51 points. If you watch this move higher, maybe it suggests that there really is no alternative at this point. Where else are you going to put your money?
Well, I still think there's a lot of positive signs here in the U.S., and if we just look out the window, I mean, the consumers shopping, they're out there spending. I don't know if it's an indication of what the markets will look like or what the holiday season will look like, but not 100% certain my mom's watching this morning. I heard last night on good authority that there might be some talk of going to Walmart for some of these early Black Friday sales.
Doorbusters?
Yeah, so I mean, if the U.S. consumer is spending, if my mom's spending, then I think that's going to bode well for the markets and certainly for the economy.
Simeon, again, this momentum forward for the markets, we may be at stretched valuation levels from a historic perspective, but is this the new normal, given where you watch central bank policy, given where you watch interest rates?
I think a couple of things. First, a little bit more of a Santa Claus rally is likely in order just because portfolio managers are chasing these returns. They want to put some of these winners on their books. Second, with regards to the retail season, you know, people are forgetting last year was tough. The retail season was up against a big market sell-off, so the comps are not so bad this year. So I think there may be a little bit of upside out of the consumer this year. And people were freaking out because the Conference Board survey came out at 125, and that was a smidgen below expectations, but that's still sky high.
All the economic data we've gotten recently has been positive, has pointed to the idea that we have kind of dodged a recession. That
I think that's right.
Sure
even in Germany. This week, we've had some good news out of Germany, which everybody thought this summer was going into recession. So, you know, things are definitely looking slightly better than they were 6 months ago and a lot better than they were a year ago. So those anniversary numbers are not so bad.
What would you tell people to do right now if they were looking to deploy cash?
Well, there's almost nothing you can do but stay fully invested for at least for the rest of this year and really going well into 2020. Because it's true, what else are you going to do with your money? And the signs of overheating aren't there either. The capacity utilization numbers actually dropped to below 77.
Yeah,
that's
but
a
I can
low
tell you
number.
if you wanted to, I mean, I'm not suggesting you try to play the China trade war or what happens on December 15th with tariffs, but that'll be a headline risk, one either to the upside or to the downside over the next 2 weeks. I don't know if you have a little bit of cash, if you say to yourself, I want to go in now because I'm betting this is going to go great. But that's how there are people who are going to think that way. No?
I just don't know how you bet against that last little rush of money to put those names on the books so your clients and the PMs look like they own these winners all year. That's what happens every time. It was in reverse last year. You had the sell-off, so
because
there's one more leg down.
But they were locking gains. That was a separate issue. There were people who did that as well.
But people were getting out to make sure it looked like they didn't have losers all year, and this year they're going to pile in to make it look like they had winners all year.
What would you suggest, Kevin, for investors who are looking at this and saying, okay, maybe I wanted to get in, but I've watched the markets run up to this point, and now I have to worry about what happens in January?
Well, we think we're in a bull market until proven otherwise. So it's crazy we're sitting here with a 20+% return for the year, which is phenomenal. And I still think we can see a Santa Claus rally. We're still optimistic for 2020. So what may be over a short-term 2-week period isn't going to change our views over the long term of buying high-quality companies, strong earnings, great dividends. We want to be in these names, and we're excited about the next month and 2020.